Hi, my name is Nicole. Welcome to my channel, Travel to Money. In this video, we are going to tackle part 3 of how to win in a recession. And this part is all about how to invest your money in a recession. If you are new here, I have created this channel to help you learn about how to travel, adventure, and have fun on the road to financial independence. I have traveled the world, I own 2 houses in Spain, and I'm on a creative journey to financial independence. I believe the road to financial freedom can and should be fun. I hope you'll subscribe and join me on this journey, no matter where you are starting from. In the first video from this series, How to Win in a Recession, we talked about how to protect your income and create a budget. In the second video, we talked about the hustle, finding higher paying jobs, renting out a bedroom in your house, picking up second jobs, and we talked about 2 specific jobs that pay over $100,000 per year without the need for a degree. So now that we've tackled how to bring in more money, let's talk about why that matters. I mentioned it in the first video and I'm going to say it again. There is no better time to invest your money than when you can buy something at a lower price than you could usually buy it for. Let's think about this in some really basic terms. If there was a Tesla that you wanted to buy and it was $50,000, but for a very brief period, they were going to sell that exact same Tesla for $20,000, well, that would be a good deal. Not just because you would get the Tesla for less, but because you could just hold on to it, and when the prices go back up, you could sell it and make a profit. When you buy stocks during the lows of a recession, you are basically doing the same thing. You are buying them on sale and then holding them until they are worth more later. This will probably never happen with a Tesla for you, but it absolutely can happen in the stock market, buying stock in companies like Tesla. This is how people get rich and how the rich get richer. Now let's talk about your finances. First, before we do anything, it's always good to establish an emergency fund if you don't have one already. The rule of thumb is to have enough saved to cover your expenses for at least 3 months, though 6 months is probably a bit safer. Okay, let's say your emergency fund is established. I'm also going to make the assumption that you don't have a lot of high interest debt like credit cards or personal loans. You generally always want to put money toward paying those off first. I'm not talking about a mortgage or a car payment with low interest, but think about this. If you have $5,000 of credit card debt and you're paying 23% in interest, why would you put your money in the stock market where you might average closer to 10% in interest? It's better to pay off that high interest debt first. Okay, so you've got your emergency fund, your high interest debt is paid off, and you are absolutely hustling to make money so that you can invest it. Now let's talk about what exactly to do with it. Friendly reminder, I am not a financial advisor and you should always do your own research before investing. Obviously, I think the stock market is a great place to invest during a recession. If you saved $36,000 over the next 18 months, like we talked about in the last video, because you find ways to save $2,000 per month during the recession, and then invested it in ETFs that return 10%. If you never added another dime to it, after 20 years, you would have almost $250,000. After 30 years, you would have over $625,000. After 40 years, you would have $1,600,000, all because you hustled for a year and a half. You might see your investments going down a bit at first, but we don't care about that. What we care about is the long term. And there is no better time to invest for the long term than the lows of a recession. Now, would it be better to save the chunk of money and invest it all when the stock market is at its lowest? Yes, that would be amazing. But is there any human out there who knows what day and time the lowest of the lows will be? No, there is no one who can tell you. And that is why it is better to consistently invest. Even the people who invested at the worst possible time during previous recessions, just before the falling point of the stock market, still did really well in the long run. And if you haven't noticed, the stock market has already begun falling, so it's very likely that we've already passed the worst point of investing during this downturn. I don't like to tell people what stocks or ETFs to buy specifically, but I'm happy to tell you what I'm doing. About half of my investments are in the S&P 500, and specifically with Vanguard, ticker symbol VOO. If you don't have an investment account set up, I've got a video right here that will help walk you step by step through how to open and set up an account with Charles Schwab. I use them and I don't get anything for telling you about their services. I'm just a happy customer. Now, I'm always a fan of investing and setting up an investment account. I just can't think of a better time to jumpstart your investing than during a recession. That is why I really want to emphasize hustling during this time and making sacrifices for your future. More importantly, have fun doing it. Hustle doesn't always have to be miserable. When I make big financial gains for my future, I think that's motivating and fun. Okay, another form of investing during a recession that I want you to consider is real estate. So many of the people I follow and look up to have found their financial independence through real estate. Some of my personal financial successes have been because of getting creative with real estate. I did really well renting out a bedroom on Airbnb, and I did even better when I rented out my whole house on Airbnb while I traveled the world. I bought 2 different houses that I sold just a couple of years later for a profit, and I wasn't even trying to flip them. I own 2 houses in Spain, and if you watched my last video, you heard about how I am currently living rent-free without any bills because of creative renting. Real estate is the reason I began dreaming about financial independence in the first place. Now, I haven't done a full send with real estate, but the recession is an intriguing time to think about it. Here's why. One of the reasons I have remained hesitant about real estate the last couple of years is because of how far out of hand the housing market has been. I also think Airbnb is still good, but you can't make the same killing you could 5 years ago. The market is far more saturated. However, you can still make a lot more with Airbnb than you can with a traditional rental, but the amount of management it takes is quite a bit more. These are the sort of things I toss around in my mind. But with the rise of interest rates, there is a good chance that the housing market, especially in certain areas, will come down, at least to a more reasonable level. Now, buying with interest rates high doesn't exactly sound good, but there are a few things I want you to consider. First, could you save enough money during the recession to buy a really cheap fixer-upper in cash? That's probably not going to be something many people can do, but if you can, it's one of the things I would consider. Secondly, just because you get a new mortgage now at a higher interest rate doesn't mean that you can't refinance in a few years when interest rates go back down. But those high interest rates are still something to look at. Say you bought a $200,000 home and you put 20% down, which is $40,000. Your mortgage would be for $160,000. You might not think that paying 4% interest is that big a difference from paying 3% interest, but the total might surprise you. The monthly payment would be about $100 more per month, but over 30 years, you'd pay about $30,000 more for the house because of just 1% interest. And that's only on a $200,000 home. But when you're using real estate as an investment, you might not need to worry as much about the interest rate. Let's say you bought a $200,000 home with a mortgage for $160,000 at an interest rate of 5%. Now, you're also going to have taxes and insurance. Your total monthly payment would be around $1,142. Even though you bought a house for $200,000, over the course of 30 years at a 5% interest rate, you would end up paying over $400,000 for your $200,000 house. If you had a 3% interest rate, your total after 30 years would be just under $345,000. That 2% in interest ends up saving you over $55,000 in the long run. But let's say that you only have access to a 5% interest loan. Let's say you turn the house into an Airbnb that makes about $4,000 per month, which I think is pretty reasonable. Let's say the mortgage, utility bills, and lawn care cost you about $2,000 per month in total. Then let's put another $200 per month aside for property maintenance or vacation rental expenses. That leaves you with $1,800 per month in profit, and your guests are slowly paying off the house for you. Not a bad deal. Now, managing an Airbnb can be a real pain. Let's say you pay another company to manage it and they get 15% of your bookings. Well, that's $600 per month. Now you can sit back, relax, and collect a check for around $1,200 per month. This is just an example, and I don't want to make it sound less complicated than it is. Furnishing a house can be expensive, and maintaining a house can have its costs too. But in the long run, I think you still come out ahead. Now, imagine you spend a few years investing and buying houses, and you end up with 4 properties that are all giving you around $1,000 per month in profit. Well, $4,000 per month is enough to live off of. And that is an example of how people become financially independent through real estate. Now, not every place is a good place for an Airbnb. You might want to do a traditional rental. This won't profit as much per house, but can also be a lot less hassle. Other people may do something like what I'm doing and rent properties that they turn into vacation rentals with the permission of a landlord. In this way, you can still make a profit, but you aren't responsible for major things in a house like appliances, leaking pipes, and most of the other big ticket items. If you like living with your parents, stay there while you take out a mortgage and make money on a property. I've seen other people who invest in duplexes or other multi-unit houses. Basically, you buy one property that has multiple units, you live in one of the units, and rent out the other one. This works best if the rent you make on the other unit is enough to cover the cost of both parts of the mortgage. This way, you live rent-free and are building equity in the house at the same time. I personally think the best deals are buying junk houses in decent or great neighborhoods, fixing them up, and then either renting them or selling them for a profit. This is because you can get really good deals on houses in bad shape. It just takes some elbow grease and imagination to really turn them around. There can be a lot of upfront work, but it could be a great way to invest your money, especially if the deals get better during the recession. Maybe you have the ability to hustle enough to invest in both the stock market and in real estate during the recession. I don't want to tell you which one to choose if you can only choose one, but I do hope that either way, you'll find a way to invest during the next 18 months because I really want to see you get ahead. Let me know what your plans are. There is nothing more exciting for me than to see you succeeding. Do me a favor, like this video, and subscribe to join me every Sunday, where travel and adventure build financial freedom. I can't wait to see where your dreams will take you.